Mistakes by the Internal Revenue Service could cause tax refunds to be delayed past the April 18 deadline for millions of Americans. Aaron Collins, the national taxpayer advocate, told the Detroit Free Press that the IRS inventoried backlog could prevent federal income tax refund cash from reaching taxpayers within the advertised 21 days. They're still working through those returns before they start dealing with some of the challenges and problems from this season's tax return, Collins said. Even though the tax deadline is on Monday, April 18, Americans who request an extension are given some wiggle room. For most states, the tax filing deadline is the one set by the federal government. However, some states have made their own deadlines. However, despite the deadline still being a few days away, it is not the best decision to wait until the last minute. The sooner you file, the sooner you get your refund. Americans who collected unemployment anytime during 2021 may find themselves owing the IRS money instead of collecting a refund this year. Unlike in 2020, there is no tax break for unemployment benefits received last year. The American Rescue Plan was signed into law by the Biden administration in March of 2021 to provide a lifeline to millions of American families during the pandemic, and part of the bill waived taxes on up to $10,200 received in unemployment for those making less than $150,000 in 2020. But that waiver is not in place for this tax year. Expanded unemployment benefits ended on Labor Day last year, and unemployment will be considered taxable income when Americans file this year and must be accounted for. People who collected either standard or enhanced unemployment in 2021 had the choice to have federal taxes withheld upfront from their weekly benefits or to collect benefits in full and pay later. However, those choosing the latter now have to pay eligible taxes on any unemployment benefits collected during the year, with no waiver on a certain amount like last year. Plus, if you subsequently started working, the amount you earned in unemployment is added to what you made through to the end of 2021. If you find yourself in a position where you received unemployment last year and you cannot pay your tax bill in full by the April 18 filing deadline, don't panic. Unemployment expert Andrew Stetner at progressive think tank The Century Foundation told CNBC about 60% of Americans who claimed unemployment last year did not pay taxes on that money upfront. Tax experts recommend paying whatever lump sum you are able to in federal and state taxes as soon as possible. Then, contact the IRS and come up with an installment plan to pay off the balance owed over a negotiated period of time. If you come up with a payment plan with the IRS, you must adhere to it. Missing a payment could lead to default and being responsible for the balance or having your wages garnished. Another important thing to keep in mind when deciding how much you pay upfront is that you will be assessed interest by the IRS on the total amount of taxes that are outstanding. It's best to have the taxes taken out of unemployment in the first place or to pay as much as possible upfront. File soon for faster refund. Although the tax filing deadline is just a few days away, it is not the best decision to wait until the last minute. The sooner you file, the sooner you get your refund. Free filing options for 2021 taxes. Qualifying taxpayers can save money by using one of a handful of free services. However, some of the free services and qualifications to utilize them have changed from the previous tax year. For example, Credit Karma is no longer entirely free. It's best to research the different offerings available to find one that best suits your needs. How to avoid late penalties. Simply put, the best way to avoid penalties is by filing your taxes and paying, if necessary, on time. If not, you need to show a reasonable cause for the failure to file or pay on time.